Hey, welcome everyone. Good morning, good afternoon, and good evening. I'm delighted to welcome you for this 1 hour session where we will look at the report on innovation in retail banking by Infosys Finacle Digital Banking Report and Qorus. This is the 14th edition. And I suggest we look at the speakers for today. We'll have Jim Marus from the Financial Brand, our good friend. We'll have Jamie Broadband from RBS International. We'll have Puneet Shahira from Infosys Finacle, and we'll be together for a 1 hour session where we'll first listen to the context setting by Puneet. Then Jim will give us the survey findings during something like 20 minutes, and then we'll get in a panel where, of course, we will discuss some of the key elements of this topic. And that's where we will invite you also to raise questions through the chat. So don't look at the Q&A section, but at the chat section, and we would be really happy to take some comments, some questions, or even some disagreements that would feed the debate that we'll have among ourselves. By the way, in this chat section, you can see the title and the link to the report for the one who didn't download it yet. So without further notice, I'm first going to tell you a few seconds about Qorus. For the one who wouldn't know us, we are a non-for-profit association since 50 years with a lot of different brands, and the mission defined 50 years ago is the same today: best practice sharing, networking on a global perspective. So we help financial institutions reinvent themselves with a lot of insights. I also would like to mention that we have our yearly big event in Milan in more than 2 weeks, the Qorus Reinvent Forum. As you can see in the program, we'll have one day on insurance, one on banking, and one about the communities, which are subgroup which meet on different topics like open finance, SME banking, and digital reinvention. And you can be sure that during those 2 first days, but also day 3, we'll talk about the hottest topics in the industry. You have a list there, which by no hazard are also the one in the report that we're going to discuss today. So you can see here a number of institutions and partners being with us in Milan. And now, without, let's say, further notice, I'm going to give the word to Puneet to hear about the first number of IDs and context setting. Puneet, floor is yours.
Thank you, Philip. Hi, everyone. Good morning, good afternoon, good evening, basis the time zone you're joining us today. We really appreciate the time you're sharing with us. In the next 10 minutes I have, the purpose is to give you a background on why we are doing this innovation research for the 14th year, along with the Qorus. To give you some understanding, let me give you the context from where we come from. I represent Infosys Finacle. As many of you may know, Infosys is a large technology consulting and product organization. Finacle is the product arm of Infosys. We create products in the area of deposits, lending, wealth management, corporate banking, cash management, digital engagement suite, and had a great privilege of serving clients, leading banks, tier 1 banks from North America to a smallest cooperative bank in Africa across 100 countries. Over 1.7 billion accounts on our software. And across all these software which we take to market, our purpose is essentially to work with you, financial institutions, to help you better serve your customer in form of how they can pay, save, borrow, invest, or insure better. And when we do this job constantly, one of the role we also have to play is to democratize what we're learning in each of these countries and various ways banks are innovating and making progress across these areas. In order to do that effectively beyond our experience, but also through research, we partnered with EFMA, which is now Qorus, 14 years ago. And consistently for last 14 years, we have brought this research together. I thought in the limited time I have, I'll focus only 3 key trends which we see evolving over these years. Why this research, as well as this topic of innovation, which is an evergreen topic, is even more relevant for our industry. Let me give you just one data point. We all know every bank on this planet has been investing on digital transformation for over a decade. Yet our research suggests only 14% of the institution feel confident that they have scaled their digital transformation and have gotten the right outcomes. And many a times people misinterpret the data, thinking that not enough is being done by the industry. I would argue it's not about just that banks are not doing enough. It's also about the fact that the goalpost is moving faster. And that is the reason it's important that we must continue to stay focused on this innovation. It must become a culture, a habit, a way of life if one has to succeed and stay relevant. So I thought we'll talk about just three trends. The first trend is essentially the most important one. We all know we are in business because we are relevant to our customers. But the way customers are adopting banking and consuming banking services is changing dramatically. If we look at this last 23 years of our century, there is a contrast clearly visible. 20 years ago, in any country where you come from today, more than 50% of all client engagements used to happen on assisted channels. These could be branches, relationship managers, call centers. But if you see today, most of customer journeys are in self-service mode. In fact, for most bank, I would argue even the more complex journeys, such as new to bank customer onboarding, more complex product sales, including mortgages, are also becoming digital. And more simpler ones like payments, bill payments, statements, absolutely over 95% of those journeys are on digital. And consequently, in the last 5 years, most of us have invested lots of our time, effort, and money in building our digital channel strengths. We've gotten extremely wonderful mobile apps. We have added chatbot capabilities. We have reimagined our corporate portals. In many cases, we have gone and offered Alexa-based banking or social media-based banking. But that's just one wave which is unfolding. At the same time, there's another wave unfolding much faster than this first digital wave unfolded, which is many of these engagements are moving out of any channels which are owned by the bank and getting into what we broadly would call it as a embedded finance, open finance capability. In fact, in some markets, I'm dialing in today from Bangalore, India, and it'll be interesting to see an example. In India, 6 years ago, open payments came to life. Today, nearly 9 billion open payments transactions happen in this country. There are over 60 apps through which consumers can initiate open payments. These are apps from the incumbent service provider, many of them are extremely innovative. These are apps from challengers who were born in last 10 years with the digital first offering. These are apps also from neo-banking players who don't hold a banking license or a banking charter, but partner with a bank to enable banking-like services. Again, their primary reason for differentiation is customer experience. Despite such diverse competition, over 90% of these engagements originate in 3 non-bank channels. And these are Google Pay, a Walmart-owned subsidiary called PhonePe, and a fintech disruptor called Paytm. If you think of it, it is just a reflection of what might happen in many markets, which as more and more open banking and open finance get adopted. And it's not only happening in payments, by the way. Today, you can go to some of third-party platforms and originate complete product journeys. We have seen that happening with buy now, pay later, every part of the world. It's happening with deposits, it's happening with wealth products, it's happening in business banking products. So the first trend, why it is important to innovate, is because the way consumers are going to consume banking will evolve much, much faster and much rapidly than what we have seen in the previous decade. We have talked in many different ways how our industry is unbundling and rebundling in a variety of different ways. And business model innovation is an important area for many of our clients. So for the last 3 years, we have been doing research with 11FS. And what we have noticed is there are a variety of new business models coming out, and one can choose to operate. If we unbundle the banking value stream, you can choose to unbundle the way it has been unbundled on this chart in these 5 areas. There are banking opportunities emerging where you can choose to play only in one row or a couple of rows to create variety of different capabilities, which allow you to be a credible player in banking. You can choose to be an infrastructure provider. You can choose to have a direct only offering. You can choose to be a marketplace, or you can choose to be a banking as a service focused platform. There are many different ways you can evolve your business model, not only to take care of the way customers have demands are changing, but also the economic incentives are shifting in the industry. The third area is, of course, technology. We all know all these technologies individually are extremely powerful in enabling new ways of servicing customers, but come together, they are moving much faster than most organizations can move. In fact, just before this webinar, we were having a small chat within the panelists, and we'll talk about, Jim made a very interesting comment when he talked about, in a recent conversation with a tech giant, he asked, is technology moving faster than the technologist? And I was very fascinated the way Jim constructed this question, but also the way response came, and the answer is scary, yes. And I think we all know, particularly last 6 months, since the time ChatGPT came to life, we have generative AI and LLM conversation happening all across. We all recognize that we have come to a very significant inflection point wherein the pace at which we have to evolve has to be much, much faster. And these are the just 3 trends I took. One can apply this to ops. Cost to income ratios are constantly under pressure. Even though we have had good years and good interest rates being going up is a good news for our industry, but the chances are, we are going to have days when it will not be easy. So there are many reasons we need to innovate. We thought we'll start this conversation with giving the top 3. With that, I'm going to invite Jim to take over and share some insights of the research for this year.
Thank you, Puneet. And I would say food for panel, if we can say. So let me thank you so much, and we'll be together for the panel. Jim, I see you're still my friend. If you know us, a few years ago, I once introduced him in a conference about innovation. I said, innovation is about disruption, being young, mindset, and everything. And I said, the only guy we found is the old Jim. But in the meantime, he's proven to be very inspirational for the industry. So Jim, over to you.
Thank you very much. When we talk about innovation, I think what we really talk about normally is the next big thing. The reality, our research has found that more and more organizations are really looking towards not the next big thing, but iterative innovations that really make a difference. Maybe it's improving a product. Maybe it's enhancing an experience. Maybe it's looking at customers in a different way, or maybe it's using data in a different way. We need to realize that innovation really has to involve the entire organization and all elements of the customer and employee experience. When we look at the opportunities going forward, for whatever reason, I'm seeing a little problem with my slide here. I apologize. This should not be okay. Let me see. Sorry, guys, I'm having a little.
Were they made by ChatGPT or by yourself, Jim?
They're made by me, so this is not good. So we'll start this over again. So I'm sorry, I'm just trying to pull I'm gonna reset really quickly and pull the slide. I apologize for everybody. Okay.
That happens.
Okay.
That's the moment where we ask panelists to make a joke.
Okay, so as we look to the future, as I mentioned, we need to look at all kinds of trends. And rather than share slides today, because you can get the charts from the report, I really want to talk about the major trends that are impacting banking and innovation. What's interesting is Puneet talked about our conversation before the event, and the question was asked, were you surprised in anything in the report? And the consensus was, unfortunately, maybe not. And what we meant by that is not that amazing things aren't happening, is that they're happening in an iterative scale. They're happening at a slower pace than what we really need to look at. When we ask financial institutions, what are the key areas of product innovation? The 4 key areas for product delivery, and product delivery actually was over 50% of the financial institutions said they're working more and more on the product delivery, which is more tactical in nature. Secondly, at a much smaller percent, about half the amount of product delivery was product innovation. Another half of what product innovation was, they said competition. So they're looking at services offered by the competition and building innovations around that. And finally, product use. Now, these are not really a major thing that people can put their arms around and move forward. But I think what is important to know here, looking at the institutions and look at what the consumers are looking for, it's not about product delivery. It's more about product innovation. We have to spend more time and effort on looking at how do we innovate the way products are used, the way engagement takes place, and really look at how the products can be evolving. We've had some major changes in the marketplace. We've had introduction over the last few years of buy now, pay later, but we really need to look and say, what can we do more to enhance the customer experience?
James, can I interrupt you?
Yes.
You're not sharing slides, right? You're aware of that?
No, I'm not aware of that. So I will, just a second.
We see no slides.
Okay, well, I'm glad you told me that. That's important to know. Okay, so I have to reshare screen.
It's quite challenging to interrupt you, as you know.
Okay, let me make sure I'm going to be going to PowerPoint, and
I thought you were reloading it and it would take a few minutes, but it looks like you think you're sharing, right?
Okay, there we go.
Yes.
Now to the slides. Thank you very much. I apologize for the technical issues here.
No worries.
So what we see is 67% of financial institutions state that innovation success was either somewhat better or substantially better than before the pandemic. So it's good to know that when innovation takes place, financial institutions believe that the success is there. And as we mentioned earlier, it's about measurement, and it's about really saying, what are the KPIs? What are the measurements we have to use? And we've got to think beyond what we've done in the past, because we can fall into the state of saying we have to have a return on investment, which return on investment doesn't mean you're moving the needle. In fact, when you look at moving from an experience to engagement, more than ever, it's important to realize that that result may not happen automatically. When you're looking at delivering better content for consumers to absorb and to move their financial wellness forward, we also have to realize that that may not be immediately measurable, but we need to move in that direction. Our research also found, just a second, okay. I'm having some challenges in getting my slides moved now. So I'm going to see if I can't move that forward. Okay, move that forward this way. So what we did find, and this has been a consistent element over the last several years, is innovation maturity still lags across all areas of banking for the majority of financial institutions. That means product innovation. When we look at the innovation around service delivery, when we look at innovation around the small business areas, most institutions, this is something where they self-evaluate. The innovation maturity is still lagging. Now, what's interesting to note, though, we believe there is transition taking place and there is maturity happening, but the bar is being elevated. As Puneet mentioned, the scale of change is happening so fast that keeping up is half the game. So if an organization says, you know what, our innovation maturity has decreased, it may be because the standard of measurement has really increased. We also have to realize that financial institutions today are more concerned about innovation and transformation from transactions to engagement. This is an important dynamic. We're seeing it across all elements of financial institutions and all elements of banking. We no longer are just asking people to, hey, can you do well at showing me how my transactions are working? And we're not even measuring innovation from the standpoint of experience anymore. What we have to do is move it toward engagement. How much interaction is going on between the financial institution and the consumer or the small business or the corporation? It's only with this engagement our financial institution is going to really realize the benefits of innovation. This is the next stage of experience, moving beyond transactions to engagement. We also have to realize that more and more we are talking about and executing against that the focusing on hyper-personalization innovation. This is more than just applying data to say, I want to know and understand my customers. It's whether or not the consumer understands that you know them. If we don't go that final mile and deploy against personalized solutions that, by the way, are being asked to do on a proactive basis. In other words, the consumer is saying, show me what I need to do next on the curve of my journey. They want the GPS of financial innovation. They want their financial institution to be on top of and in place of them, almost like a concierge. What's the risk of not doing this innovation? The risk is probably not attrition in the normal sense, in the traditional sense, where a customer closes an account. What we are seeing more of is consumers dispersing their relationship across multiple companies. So while I may still have my deposit account in my business bank and a deposit account in my personal bank, I now am doing more transactions and have a deeper relationship with maybe PayPal, maybe Apple, maybe Acorns, maybe other firms in the marketplace that are providing more personalized solutions at speed and at scale. The consumer is no longer looking at innovation in the financial services industry with the perspective of what are other banks doing. Because of COVID, because of the eye-opening experiences that consumers had in many areas, in many channels with many companies, the innovation bar is being set not by other financial institutions, but by the tech companies, by the retail companies, by companies like Amazon, by companies like Apple, by companies like Google, and by ChatGPT. We have to realize that the innovation that we're looking at has to go beyond traditional banking. This is going to take a complete reset of the back office for digital transformation and for innovation. You know, I often use the highlight of saying the difference between traditional cable and streaming services is the difference between set a time when I want to record something and have my TV actually present to me what I probably would like to watch next. This is going on in a consumer's mind every day, where a consumer knows more than ever that that data can be used to their advantage to devise ways of personalization at scale, but more importantly, experiences that are proactive. My TV now can tell me what I want to watch at certain times and what movies I probably enjoy next. We can't go through one of these innovation webinars without talking about ChatGPT. If the question is how fast is change happening, remember the first iteration of ChatGPT happened on November 30th. The second innovation of ChatGPT happened on March 23rd. The third innovation or iteration happened about 3 weeks ago on a Friday. It is now not even big news, but every change in ChatGPT is escalating the capabilities exponentially. Organizations across the globe are looking at new ways of using connective AI, conversational AI, to build better solutions, to build a connectivity that can make it so a customer can get more engaged with their financial institution. This is not just a communication capability. This is a coding capability. This is organizations looking at how can I replace rudimentary jobs and let the computer do more so that humans can move to a different scalability. This is a new way of innovation. At the end of the day, the foundation is data, analytics, and technology. These have to be upgraded on a regular basis. We have to realize that more than ever, we can't use data and analytics or outdated technology as an excuse, however. Every cooperating organization, every partnering third-party solution company can work with data, analytics, and technology that you have today and work on solutions that are compacted and composable. No longer are we looking for that major data enhancement, even though there are organizations that are doing that and doing it well. They may not be doing a complete core conversion, but it's unacceptable for organizations not to reinvent their new account opening experience for a digital consumer that wants to open an account in 3 to 5 minutes. It's unacceptable for us not to innovate a loan application process that currently takes 20 to 30 minutes and multiple days into something that somebody can access in an instant. We have to rethink how we view innovation, but how we view the delivery of services. When organizations are looking at a prioritization of the innovation, they need to look at what is going to impact the consumer the most, the fastest, and bring an ROI to the table quickly. Oh, by the way, we're not talking about innovations that are going to take a year, 2 years, 3 years. We're talking about innovations that can be developed and deployed in 14 days, in 1 month, in 3 months. Look at what WeBank is doing in China. Their claim to fame is that they've been able to service an entire universe of consumers that most financial institutions would not find profitable, and deliver new ways of serving these consumers economically, on the cloud, and with innovations that for them are being deployed in 14 days or less, and sometimes are being deployed instantly with the thought process that I may have to turn off that innovation to move forward and realize it may not always work. That is risk management as opposed to risk avoidance. Most importantly, we cannot invest in new technology. We cannot invest in new ideas unless we include cultural and leadership transformation. I know that all the people on the call today, all the speakers on the call realize that we can sell anything to a financial institution. The challenge is, will it be deployed the way it was intended to be deployed, or will we stick ourselves and get in the way of innovation success? We have usually said in digital transformation and innovation, the biggest hurdle to great innovation and great transformation sometimes is bankers can't get out of their own way. They buy a solution and then say, I love your solution, but I want to do something as I've done it before. And that completely disrupts the potential for innovation. We need to explore embedded services and below the glass reinvention. As I mentioned, innovation going forward is really going to be based on what you can do below the glass before you have to worry about the way the consumer sees it above the glass. They drive each other. In addition, we have to realize that more than ever, we need to look at innovation in a way that really transforms the customer experience, but in addition, the employee experience in a way that's never been done before. You know, that's a real capsulized view of what the report has talked to and where we need to go in the future. I think we really need to look more than ever at ways that innovation can be done, including everybody in an organization, not just the department. There has to be a distribution and democratization of the innovation process where people are given the data, insights, and the tools to innovate with each other and on behalf of each other for the consumer, for the employee, and for the corporation. My goal, my wish is that next year's report with Qorus and Infosys Finacle will not be just a restatement of what we've seen in the past, but with some of the new technologies, with some of the changes that are happening in the marketplace, we can look at innovation in a new way and look at some really great case studies that are not just done by the same players. Philippe, I'm gonna turn it back over to you, I believe.
Thank you so much, Jim. And this, of course, combined with the reading of the report, which you might do any moment, will bring you a lot of insights. And as a joke, we were discussing in the beginning, like, should we, reuse the report this year, next year, just put 24 and not change anything? That means that we come to the question of, to the final comment of Jim of how much can we progress? And I'd like to first give the word to Jamie and welcome you, by the way. We didn't talk yet. Jamie, hey, you've read the report, I know. what are the first thoughts that come to your mind when considering and looking at all this? What is there any surprise? Is it fully expected? What's your feeling?
Yeah, fantastic question. And first of all, great to be here. Really insightful presentations and thrilled to be part of the discussion. As we said before the session, when I reviewed the report, I kind of nodded along and thought there's no surprises in here. Now, whether or not that's comforting or a sad indictment, I'm not sure. But effectively, banks know and are aware of the changes in customer behavior, this increased expectation. They know that they need to transform. However, the platform isn't burning yet, right? What we haven't seen yet is the motivation to change and to change quickly. So I'd say that most banks were doing just enough innovation required to stay in the game. However, the need for that is only going to continue to grow and grow exponentially. And I guess the fear is for most financial institutions is as that pace of change continues to increase, will just doing enough continue to be enough? And that's why guys like me are currently in roles, because you've got to be the catalyst that is telling the bank of that need to change and predict that, I don't want to say grim future, but that need where we're going to have to change our business model, change the way that we work, and convince them of that while the sun is shining. And that's the challenge that I think we all face. And the hope is that as we continue to do that job effectively, we start and see a bit more of a paradigm shift from year to year in these reports.
Okay. Well, thank you. We'll come back on some of the aspects you mentioned here. But looking at what you said, business burning, I've seen those threats mentioned in reports since 20 years. And indeed, it's written, but it looks like it's not felt like this by many people because they don't change that way. So that's probably what you just said. So Puneet, what's your view on after having written and read the report in terms of surprise feeling globally?
My feeling is, Philip, and I'm going to take advantage of the fact that I had the opportunity to work on and read this report for over a decade, if not all 14 years. I think the change is small but palpable. On many areas, banks have been able to build digital muscle. And also report has kept pace. Every year, what we seek and try and understand from banks continues to evolve because we also understand as a organizational as well as industry benchmark keeps moving, where is the next focus going to be? However, we need to be really respectful of the effort which goes in. And if I were to summarize changes, I see some changes across 5 key dimensions. I see clear changes on the way banks have moved towards customer engagement. We see clear changes happening in the way banks are applying innovation to run their operations better. That may be around cost control, digitization, automation. I see changes the way banks are innovating with parties outside of the bank. There's a significant change which has happened in the last decade. I also see the way bank engage with technology providers, whether it's a capability which they built internally as well as with a technology partner. And finally, I see the way that banks are changing themselves. The entire art of innovation or the craft of innovation, if I can say, because there's a bit of science and there's a bit of art. It's essentially a craft of innovation has also evolved. So I do see a change, but obviously not every year there is a significant change that one can say 30% change happened only in this dimension in a year. But if you look at broader view, and I think in an innovation 3 years view from an organization capability perspective is right. While as Jim said, the expectation now is we must do DevOps every day. We must produce something new out in the market today, but cultural change doesn't happen every day. It takes a little while. I think if you look at that, there is definitely a moment.
Yeah, we'll be back on this aspect of AI. By the way, we got a question. Thank you. We'll address in a few minutes. But we said about business burning, but I also saw that the pandemic apparently made a shift, in the way institutions are approaching innovation. So, Jim, do we need, like big crisis to make a big shift?
2 things. Number one, something got buried in the numbers was that there is some great innovation being done by some of the smallest organizations. We're going to get into that later. But when we talk about the pain that we don't feel, it's getting back to legacy management processes. I referenced it a little bit before, is that organizations are not seeing the closure of accounts. But what they're not paying attention to is a massive distribution of relationships. What I mean by that is there's silent attrition going on every day. If we have 400 people in today's webinar, I ask everybody, how many of you have closed a major financial relationship, your checking or current account, in the last 5 years? We just get a couple organizations, a couple people that raise their hands. If I then ask, how many of you have opened a new financial relationship through a challenger bank, a challenger organization, a new tech company that's doing financial services, and how many of you have done it in the last 2 years? Virtually everybody raises their hands. This should be a warning call that what we're not measuring is what the causation is, what the challenge is. We also did a research project with a couple organizations on what happened when consumers got their benefit checks as part of COVID. Everybody got really excited about the amount of deposits that grew at financial institutions. Very few measured the fact that roughly 30% were almost instantly transferred to other organizations. So what happened is we have people that are not as loyal as we think they are just because they've been with us for 25 years. We have people that say, you know what, I'm looking for that personalization. I'm looking for that engagement. There is pain out there from the consumer. And eventually, we're going to make the closure of accounts so easy that they just say to zero, transfer it all to another organization. We've gotten closer in some areas, but I think we really have to look at the challenge is real and the disruption. The sickness may be a little bit lower in the bones than what the doctor sees on the x-ray screen.
Yeah. Also, yesterday I was in a call with a very known expert in the industry, a research analyst as well, and she told me she was teaching to very young people, and she showed a lot of challenger banks, very proud of the change in banking, and those guys said, it's old banking, you come up with something new. So just to say, I like being driven in the panel by the questions from the participants, and we got a great one, and I suggest we get a deep dive a bit in the technology to see how do institutions welcome it and implement it. And the first question is about IoT payment and also leading to blockchain. How much is it still a concept? Do you see banks really implementing it? So Jamie, would you take the first maybe?
It's interesting.
Sorry, I said Jamie.
Oh, Jamie, I'm sorry.
Yeah, sorry.
I thought you said Jim as well, and it sounded like he's got an answer ready to go.
Well, this way Jamie actually gets to speak instead of me, so that's good.
I think like most things, Philippe, we see it coming, but perhaps not fast enough. If you went and opened the doors of most financial institutions, they'd say, yes, we've got active experiments testing things on blockchain. We've got active experiments testing things on IoT, smart speakers, you name it. I think at the moment, consumer behavior hasn't moved far enough along where this is disrupting the current model, right? People still want to primarily bank on their phones rather than through their smart speaker. They still want to transact in ways that are familiar to them. And most of our institutional clients aren't yet ready to perform transactions on the blockchain. Like, we know that it's coming because these things are a way of rooting out inefficiency from the system. But it's just not there yet where it's kind of broken through into the masses.
And I think, Puneet, it's interesting what we heard, because sometimes we say there's something there, but we don't think customers are ready to use it. But the real innovations in other industries is when a producer is bringing something which the customers did not expect, right? So what do you think about those technologies arising like IT payment, blockchain? And I'd like then to get to the AI topic, which is around the same question.
I would agree with Jamie that the industry has been slow in getting to the real life use cases where customers are adopting at scale to some of these technologies. To be candid, we did our first install of blockchain-based solution in 2016. We are 7 years later, and I wish we had the kind of adoption we thought we should have. But having said that, we see absolutely movement happening in certain areas, which are more pragmatic. Like, we have 18 clients of ours coming together and running a trade finance clearing system on blockchain. And that is cutting down time to process trade finance, which is inter-organization automation, by huge 90%. We are talking some of the instruments such as letter of credit, which would take in many countries actually more than a week, coming down to few hours. And we hope that it comes down to as small a time window as possible, and makes a huge difference. It eliminates fraud, which is a big advantage for the industry. It gets timely access to cash, which is a big advantage for the consumer. But I think we're taking much longer time also because in some of these technologies, there's more industry consensus building required. There needs to be somebody who's going to bring them together and orchestrate, and regulators are not necessarily playing that role. With CBDC, of course, things are going to change very dramatically. Even IoT, I think some use cases we all have been very used to, using it in our cars, for parking, for toll. Many other use cases which we thought again are slowly getting established. I think it's a matter of time. If you had asked a question on AI, for example, 8 months ago, you would have got one response. But post ChatGPT, I am sure the response on AI is going to be dramatically different for every organization, because it seems like there is a significant uplift which has happened in the technology, wherein a lot more is possible with certainty, with having a control, but there's a lot to be done.
Yeah, thank you, Jim. You were the guilty who said ChatGPT first in this session, so the next question will be for you. So how is AI going to change banking, and how long will it take to see dramatic changes versus what we knew a few months ago?
Okay, I'm gonna quickly, I know that's not some word that's usually put with me, answer the last question too. I'm going to Money 2020 in Amsterdam next week. Virtually 90% of the organizations that are reaching out to me for me to meet with them are payments organizations. We're seeing the most innovation happening in the payment space. In addition, just to show I'm not an old man that can't learn new tricks, I opened up a curve card this week so that I can get a wearable at Money 2020 from a company that's providing rings and bracelets and other things. This is going to happen very quickly because the consumer now realizes what more can be done and what the safety factors of authentication and identity. When we talk about AI, this flows into that to a degree. AI can be used very effectively to do better authentication, better innovation at scale and at speed. When you look at ChatGPT, that's one phase of it. Where I'd like to trail back from a metaverse view, because I think metaverse is right now too broad on the priority scale. But when you look at, how do I use AI and data more effectively? What is really happening now, organizations are realizing they don't need to develop it. I'm gonna keep on coming back to the use of third-party collaborators to get to that space. Even if you have a core provider today, you may find another organization that can use the blockchain, can use AI, and can use data to drive better experiences. We're not going to have any waiting time here, because the consumer really is at the cusp of demanding from us what they get from everywhere. They get speed of payments. They get knowledge of the consumer at their local restaurant, at their local retail store, at their local grocer. They're going to wonder at some point, why doesn't my bank do that? Or they're going to have silent attrition. They're going to find those organizations that understand them best. I use an example that I no longer use my primary financial institution on the consumer side for my savings and for a lot of my transactions. I'm using a company called Acorns that builds an investment platform that continues to keep me engaged. If you ask my son, what's his primary financial institution? He'd say Venmo. It's not his checking account. Checking account simply is behind the scenes. This is where AI can come in, where you can combine all the insights, all the analytics, all the data, both internal and external of a consumer, and deliver proactively the type of solutions consumers want.
Yeah. Well, Jamie, that's exactly, using AI for process is quite clear, but would you use it for conversational as well? And how much would the customer agree and understand the use of AI instead of any physical person, for example, or call center?
Yeah, so a lot of banks will.
Is that a concern?
Yeah, a lot of banks will try and convince themselves that customers crave human interaction, right? Like, AI can do a job, but really, what customers want is human interaction. And what customers want is efficiency, and they want to get the answer to the question, not even have to ask the question because the thing is already done. AI will absolutely have a role to play in that. I think a lot of banks will sleepwalk into, well, how do we use things like ChatGPT and Google Bard to really advance the maturity of our ability to serve customers through AI. The thing that will catch us napping is that actually the consumer is starting to develop their own use of AI. And banking is one of those things that they're going to want to outsource and automate. And you'll have seen the conversation, the video of Google Duplex, where it makes the call to book a hairdresser's appointment, whatever else, right? Like that's hygiene that the customer doesn't want to do anymore. Banking is one of those things. Nobody enjoys banking. Nobody gets up every day and is like, today's the day I'm going to do my banking. So they'll be looking for that maturity of AI in the personal assistant space to say, how can I put my banking onto my own assistant? How can I have that vehicle that's running 24/7, that is making non-biased decisions, that's constantly moving my money to optimize my financial position, and it is on my team? Now, if banks can develop that in a really smart way, great. If not, somebody else will, and banks will quickly find themselves that they've been disrupted again in terms of that customer interaction.
Okay, very clear. I'd like us to give a bit of hope to the audience and the world. Can we just exchange, each of you, one example of an innovation that has been very efficient, probably a pragmatic one, a short one, to prove value without entering in a 2 years project? Puneet, would you start with what you see in the industry yourself, also supporting many institutions?
Sure. I'm a big fan of partnerships. So I'll take a more recent example of, month and a half ago when Goldman Sachs and Apple came together to launch that high interest savings account. If you go by just the media release, one week, $1 billion in deposits and over 350 million accounts. That's what good partnerships can do to a bank. So, I would urge all our participants to go out and look for right kind of partners who can add value to your proposition and make sure that the customer experience is better than what you can deliver alone.
Okay. Thank you. Jim, any, innovation you would like to mention where you were a bit under pressure?
Yeah, I think the deployment of banking as a service technology and the utilization of it by smaller financial institutions are open the doors to new partnerships and innovations that can build scale. At the end of the day, if we can't have speed and scale, we're going to run into a real barrier with regards to cost. I have a financial institution, a $5 billion financial institution in Everett, Washington, called Coastal Community Bank. What they've done is they built a couple relationships, banking and service relationships. One was with a company called One. One deployed financial services very efficiently and very effectively on a mobile platform. What happened was One then got purchased. They got purchased by Walmart. So all of a sudden you have a $4 to $5 billion institution that has the potential of generating second-party relationships with 300 million consumers. Now that's like hitting the lottery in the potential. But I think what smaller organizations are realizing is they're building partnerships. It's not a tremendous innovation in and of itself. It's the deployment of technology to build what's needed in the marketplace where they can be a survivor in the long term.
Okay, thank you. Jamie, same question, and maybe if you can also share, without giving a failure that was, very maybe inspirational or educational in terms of innovation results.
Yeah, sure thing. So I know the question was rooted in giving hope. So if I come back to our most recent Black Swan event during COVID, right, where banks had to deliver entirely new products, digital journeys, and do that remotely. In our institution, within a 4-day window, we delivered a new product, digital journey, end to end, and we've done that remotely. So banks can innovate, when the pressure is there to do so. What we need is to maintain that pressure all the time. The other thing that I would say, to come back to your failure question, banks are getting much better now about not building things. Instead, putting together a very quick and dirty, clickable prototype that's not plugged into anything and putting that in the hands of customers after a week of ideation and say, if we build that, would you use it? Once upon a time when I joined the bank, we went into deep dark rooms for 2 years, built something that was perfect, came and launched it to the customer, and the customer's like, that's not what I want. That's gone in the bin. Now we are far more in that iterate and learn process, right? So constantly the things that I put in front of my customers aren't plugged into anything. They're just a mock-up, they're an idea. And what we get is that feedback straight away around, yes, this is along the right lines, but make it do X, Y, and Z. And so we deliver value to customers in a much quicker and shorter time frame and build it with them rather than for them.
Okay, wow, great. I'd like to get to two next points before we close. The first one is that, Jim, I found a report that the innovation focus is still personalization in terms of customer experience today, and it's I think very normal. There's still a lot to do. I was surprised when looking at the next generation or level of innovation, and I was hoping a lot in terms of open finance, ecosystems, working with partners, but for new business model as well, not for the traditional technology. I see that the rate of expectation is very low there. It's even only like a quarter. So I'd like to hear from you, Jim, first. Why do you think we don't see way more innovation in terms of collaboration on other business model than the simple pure banking, other product? Could financial institutions push themselves for more than simple financial services?
They can. Unfortunately, I'm going to get back to the fact that smaller institutions and the biggest ones are doing it. It's those mid-sized organizations that get stuck in risk avoidance. And what happens, that really gets into people's mind, because it's not just risk avoidance, it's changing the role of many of the people in the back office that have done things a specific way for so long. I think it's also something we have to remember from a prioritization basis. I get frustrated when organizations talk about the metaverse, but haven't fixed their new account opening or their digital loan application process. And that may seem really rudimentary, but even when people sign up and build a collaboration with a company that promises they can deliver it in 3 to 5 minutes, they say in the US, they'll say, oh, but I still want to use the driver's license, the government ID as my identification, my know your customer thing. That is breaking the process before it even starts, and it's driving innovative companies nuts. Look at the way that we used Apple already in the past, but look at how easy it is to open a new credit card with Apple. It is 4 screens, it's 16 pushes of a button if they already have the right information on you. I didn't have to put one thing about me except the last 4 digits of my social security number and my annual income. I pushed a button and all of a sudden it immediately provided me what my credit limit was, how I could get it, and whether or not I want to open up get a physical card. I think we can get caught up in the big innovations and miss the small ones that we need to do, by the way, in a 2 to 3 month period. I think the challenge right now, and it sounds so easy, but it's so difficult, is legacy thinking. Jamie's very benefited by the fact that his leadership has had an innovative thought process, has had a transformational. They embrace change. They want to be a leader in the business world, in the finance world, in the overall ecosystem of how a consumer interacts. That's really beneficial. That's what we're seeing in some smaller organizations. We're not seeing it overarching, though.
Yeah, indeed. So, Puneet, where do you see, nice cases or ideas of new business model, other way of, or adding services or ideas to the existing one to be maybe more innovative than what we see today?
I would argue I see everywhere. I see it among large banks, I see it among mid-size, and I also see it among small banks. I think it's eventually turning out to be what Jim articulated, what is the persona of organization. And in many ways, persona of organization one can deduce by looking at its board, by looking at its executive leadership, and the kind of statements they make, including in investor calls. So where you find persona of organization is progressive, irrespective what size of the business they have, what franchise they have, whether it is retail banking, small business, or large corporate banking, you see the changes happening consistently. So it's eventually about people. Technology is there for all of us. It's about people and culture.
Okay. Thank you. Well, you know what? I kept for the end what is probably the most challenging part of the innovation, and I'm thinking about culture and leadership. And I remember when we launched at Chorus EFMA previously, the Innovation Summit, the first speaker was a great guy. He was head of innovation, and he said, "My job is to kill my job." So, Jamie, when I take your job, you know, head of digital innovation and design, when will innovation disappear from your job title? And is that a target, if I may say?
Yeah, that's definitely a target, right? Like if everybody had the discipline and the know-how of, you know, how to keep themselves fit, we wouldn't have personal trainers. If everyone looked after their teeth, we wouldn't have dentists. The fact that my job exists means there's a job to be done, but the goal is always to, you know, shift the organizational fabric to the point where that designated, you know, head of digital innovation isn't needed because it's a digital and innovative organization to its core. We're not there yet, and I think, you know, if I was to sum up my role, it's the need to be that classy pest, right? To go and remind people constantly of, even though, you know, things look good today and we're making money, it's less about the next quarter and about the next quarter century. And how are those changes that seem slow and steady actually going to completely disrupt us if we're not on top of technological advancement, changes in people's behavior, et cetera, et cetera. So I wish my job didn't exist. At the same time, I absolutely love my job. And so I enjoy it while it's still here.
What are the different components of your job, if you look at on a month or year basis, between probably concrete projects and evangelization or whatever?
Yeah, a little bit of both. And you know, the focus of where my team spends its time is two strands, right? We're focused on incremental innovation. So what are the things that we can do almost immediately to make things better? How do we digitize this process? How do we take inefficiency out of that process and make banking better today? At the same time, it's kind of a zoom out focus around what are the macro shifts? Fast forward 25 years, what does banking look like? And does the things that we're investing in today, are they lasting? And trying to shift the focus there. It is a very difficult job, right? Because you are trying to run a marathon, but at sprint pace, and there's no finish line. You're having to convince people to make investments when you can't prove the ROI in the short term. So it's not easy, and it requires leadership that are completely bought into that new way of thinking, and less about thinking like, you know, siloed banks, and instead thinking about kind of systems and the role that we play within a connected ecosystem, championing for, you know, the customer's benefit and for the long term. I'm really fortunate that within our bank, we've got leadership that kind of get that, so the job is easier. But I don't take for granted that it's an easy job in any way.
No, great insight. Thank you. So, Puneet, if you look at culture and leadership, what are the let's say, maybe not the advice, but what you see in the market, where you see things happening well, and if you can just share a few ideas on this?
When I think of this, it's about akin to muscle building, right? You first need to have a decision that you're gonna go and do something, and then you have to have a discipline of doing it on an ongoing basis, and then you have a determination when things will go bad, when there'll be 10 other priorities, you will not leave it, right? When you combine the decision, that discipline and determination, you start building that culture. And, you know, while I said it previously that it's people are really important, it's also important that when you combine people culture with the organization economic model, what kind of economic activities get incentivized, what get penalized, that makes a huge difference. We all talked about how it is important to do iterative innovation, except the fact many of those are going to fail. It's also important to know that technology and data foundations are critical. You can have all that, and if you don't have got the tools right, you're going to not be able to move forward. So I think it is a combination of these things. You need to have mindset right, you need to have skill set right, you need to have tool set right. And if you have this magic combination right, you will see progress every week, every month. And, chances are that this ongoing marathon, as Jamie very beautifully articulated, will feel less onerous and more joyful.
Okay, thank you. Jim, why don't you give the 1-minute conclusion, on all those things? I know it's too short, but you're going to make it.
No, it's really, I'm going to even go shorter than 1 minute. Organizations, to innovate and to be future ready, need to understand their why. When you talk about a fitness program or anything else, that usually happens because somebody has a major why as to why they're moving forward. I know that Jamie and his organization knows their why. Many financial institutions have a legacy thought about what they're doing and why they're doing it. If you know your why, you can move forward at speed and scale.
And you think there's enough leadership once you know why to conduct in that direction?
Yeah, you know what? Have everybody build that, and that way everybody realizes they're part of the digital transformation process. Every employee in your organization is afraid they're going to lose their jobs due to technology. Involve them in the process.
Man, that's a good one. So so we finished by culture, leadership, people, which is a great topic as such. I must say, frankly, I'm a bit frustrated that it was so short, because there's a lot and way more to say. We did in 1 hour. I'd like to thank you so much for your contribution. I'd like to thank the participants for their presence and questions. And of course, don't forget to download the report. See you in another Qorus event. Have a great day.